Good morning, Paul Georgie from Allendale. It's October 3rd, and it's Monday morning, beginning of a quarter, beginning of a month, and we got markets under pressure here in most commodities. The focus this morning comes from just talks over the weekend about Greece and their debt situation. They did pass a bill over in Greece that will reduce government employees by 30,000. However, it still misses its budget target, and now the question is going to be, will the euro give them the next payment in loans that they were expected to get? However, so with that, we've got the Euro finance ministers meeting this week to discuss the situation. We've also seen the stock markets under a lot of pressure because of this. Some of the big Euro banks are down as much as 5% in overnight trading. So all this news is carrying over to our commodity markets here in the U.S. The dollar is making new highs for its recent move, breaking out to the upside. A strong close today would put the next target on the nearby dollar contract up around 81 to 81.50. So that would be sharply higher, which in turn puts some pressure on commodity prices, corn and soybeans. The situation here in the U.S., the financial situation, the congressional situation, trying to make some kind of commitment or decision on jobs bill and so forth. We've got Bernanke talking to the congressional panel tomorrow, so that should be a focus as well as traders try to figure out where to go. And I think what's happening right now is the trade is moving out of commodities, risk-off type positions, moving to a cash position until things settle down and they can get a better idea on, is Greece going to default? Is the U.S. going to come up with some type of plan here that Washington will agree to? Some of the direct influences for corn and soybeans, the USDA grain stocks on Friday morning was certainly a stab in the heart of the bull as the stocks number was released over 1 billion, 1.12 billion bushel of corn is now projected for the ending stocks for the 2010-11 marketing years. That surprised a lot of traders and caused the pressure on Friday, continue pressure here this morning. Now the focus is on harvest. What kind of yields are we going to be getting? Is the yields really as bad as we thought they were in August and early September, just a month ago? We're starting to see some harvest locally here in McHenry County, Illinois. We've seen some harvesting over the weekend. Corn harvest is slow. Yields that could be calculated anyway were anywhere from 20 to 30 bushel below of what was expected. Moisture is still running pretty high, so they're not going to be doing much harvesting of corn here in the short term. However, soybeans were the biggest surprise that were harvested over the weekend locally. 70 plus bushel an acre soybeans, and certainly the producers were not expecting that. We're getting yields out of Nebraska as well. The yields are less than what was expected on corn as well because of green snap, and the Goss's wilt was certainly a reducing factor in the yields. Hopefully our producers out there are saying, well, if they get into better standing corn, they're certainly looking for better yields. The CFTC Commitment of Traders report out on Friday showed that the funds did liquidate sizable amounts of contracts. 40,000 contracts plus in corn and beans were sold. However, the net long positions still are extremely large. Over 240,000 contracts the funds carry in the long position in corn, 75,000 plus in the soybeans. Wheat, the fund positions there are a minus 50,000 contracts, and they did increase their short position in wheat last week as well. So The attitude, I believe, right here this morning is let's get to a cash position, find out where we're at, and that's the kind of attitude that's dominating the grain markets and pressing prices lower here. Rich Nelson has calculated some economic values compared to what they should be based on the ending stocks that we've seen from government last week. This 580 area should be good support in the based on economic value in D's corn. So we'll see where we go, see what kind of pressure we find there. In the cattle trade, we had a very exciting trade on Friday. Cash markets traded finally $4 to $5 higher than a week ago, 120 to 121 in the live trade. That was up from 116 a week ago. Cutout values, however, didn't do very much, down 77 on the choice, up just 7 cents in the select. The hog market, the cutout values there were down 20 cents on Friday, but nearby futures up, nearly hitting limit up right near the close in the October contract. And I think there's a couple factors there that you got to be aware of that's forcing that market. It's the lower corn prices is causing traders to believe that there's no need to be long these summer hogs because they're going to we're going to have corn and have more hogs in that time frame. So there's a lot of spread liquidation going on there where they're selling the deferred contracts, buying the nearbys, and if you look at the price difference, you can see that very easily. But there has been a lot of liquidation of spreads there. And the other factor is their rumor that demand for pork is coming for exports. And South Korea, even China, still waiting for China to come in and buy some pork from the U.S. to help stall their inflation race that they've got going on. So that is the factor in hogs. We expect that starting this morning we'll probably see some continuation of that, especially with grain prices under pressure here as well this morning. A lot of things going on, reasons to stay in touch with Allendale's research. We'll be happy to answer any questions that you got. Give us a call here. Give me a call or Rich Nelson a call. We'd be happy to talk to you. And you can reach us at 800-262-7538. We wish you a very successful trading day, and I'll talk to you tomorrow morning.